Greetings, my name is Kevin Matthews and I am the tax professor. Welcome back to class. Remember, class was never out of session because the learning never stops. And today we're going to talk about a topic that actually comes up quite frequently. I get asked by a lot of people, my wife and I, we make a lot of money, so we're going to go ahead and file separately. And I kind of always have to take a step back and go, whoa, hold on a second. Why are you assuming that you have to file married filing separately if you make a lot of money? Now, another time that we oftentimes hear that clients want to file separately is if one client makes a lot of money, or one taxpayer makes a lot of money and maybe the spouse makes none, or is a stay-at-home mom or stay-at-home dad. And so there's this misconception if they do married filing separate, they're going to save money. And I could tell you in very, very rare circumstances are you going to save money by doing married filing separate. The IRS and Congress work very hard to convince you not to file married filing separate. And there's a whole host of reasons why. I don't want to get into them in this video because some of them I've been told in confidence and some of them I've been told, that they say, well, this is why they really want to do it. I don't want to get all conspiracy theory on you guys all at this time. There are going to be some times, however, where married filing separate actually is a good idea, but it's going to be a very select few. So in general, it's going to depend on which status results in your lowest tax. Now, most CPA firms and tax preparation firms that have, CPAs, EAs, or tax attorneys, if you want to know what an EA, CPA, or tax attorney is, please go to our video that talks about that. I'd be very happy to go into that in deep discussion in order to sort of figure out what ends up working out best for you. But, usually like with my clients, I have this thing called filing status optimization. Well, what it allows me to do is I can click a button and it says, hey, if you took this tax return, you did married filing separate instead of married filing joint, these would be the effects. Now, like I said, I would say 99 times out of 100, I click on that and the effects are, it's worse. It very rarely yields in significant tax savings. There was a time where it could, and I actually used to specialize in this, prior to the overturning of DOMA, the Defense of Marriage Act, which was the federal law that made same-sex marriages illegal. I actually was using the situation to help same-sex marriage couples. A very good example, Washington D.C. Same-sex couples could get married very easily, and there were some times where we would use the fact that they were married at the DC level but not married at the federal level in order to be able to generate a much better tax situation for the for our clients. And so I still remember to this day when I was telling several of my clients, hey, DOMA just got overturned by the Supreme Court. I'm glad for you, but at the same time, it's going to cost you on your tax returns. And almost every one of my clients said the exact same thing. They said, you know what, Kevin, I don't care. I'll pay higher taxes for getting my rights. And I was very happy for them. And unfortunately, after DOMA got overturned, I was no longer the DOMA expert, but there's sometimes where a certification, or not really certification, but a specialty that one person has that they're very happy to lose. It actually ends up working out better in the long run. But what ends up happening is we will actually take a look at that and say, we'll click the button and we'll say, hey, look, filing status optimization, does this work out well? Now, that program, it works most of the time. And when I say most of the time, I'm talking, 80–90% of the time it's correct. If I get done and I'm looking at it and I see that your tax savings was only like $200 if you do married filing joint, I might take a look at it anyways and just say, hey, look, let's just run it just to find out. Because I've had some times where just the way we split stuff, because sometimes the programs, when they're figuring it out, the filing status optimization, it takes certain assumptions into mind that certain things are going to be split 50-50, and that's not always going to be the case, particularly if you have one high income earner and one who's not. It does not mean that you go back to the single rates, and I think that that's something that many people don't realize. realize, there are 4 separate tables when we talk about filing tax returns. You have single, you have head of household, you have married filing joint, and then you have married filing separately. The married filing separately are I would say it's absolutely the worst tax rates that you can get. And so what ends up happening is, not only is it the worst tax rates, but another problem that we end up having is that there's several deductions and several credits that they basically say, if you do married filing separate, gone. Very good example would be traditional IRA contributions. The limits drop significantly if you are doing married filing separate versus married filing joint, or if you're even doing single. So if you're in a situation where you think that you're going to be filing married filing single or married filing separately often for whatever reason, you probably need to talk to your CPA and make sure that that's actually going to work out for you. I doubt it would. There's only a couple times that I would say that it ends up working out, and like I said, if the program tells me it does. But there's also some other times where we would use it too. And one of those times that we would use it is if for some reason there's a legal issue. And again, that's way beyond the purposes of this video. But there are some times where, taxes be damned, I don't care. I'm more worried about protecting my clients. And, if I'm worried that, for example, if they're about to go through a divorce, and the reason why they're going through the divorce is because they found out one of the spouses, or I'm sorry, not one of the spouses, but the spouse is actually doing something illegal. We definitely want to get to a point where the taxpayer is going to do married filing separate. And the reason is because we don't want that taxpayer to be subject to, legal issues as a result of the fact that they have to claim that they understand everything that's going on in their spouse's life. I have actually seen that once. I have not seen it in a CPA practice. I did this when I did a volunteer practice. And, the guy said he was undergoing a divorce, and the reason why is because he found out his wife was dealing drugs. And I said, good, we're doing married filing separate going forward because we don't want you to be responsible for any of that stuff. And so that's actually a legitimate reason to do married filing separate regardless of the tax situation, tax consequences. Yeah, so there's also going to be some other benefits that are going to be taken away as a result of this. If you do married filing separate, sometimes Social Security benefits are going to get taxed harder. We're also going to see where, like I said, a lot of the tax credits go away. Very good example of some of these tax credits that go away is the American Opportunity Tax Credit, the Lifetime Learning Credit. So if you want to do married filing separate, all of a sudden those are gone. And so, if you qualify for them, sometimes it ends up working out better in order to be able to just do a married filing joint return and figure out how best to do it. You also have the concern that if you do married filing separate at the federal level, I know in these videos we don't talk too much about states, and the reason is just because here in the DMV area we have 3 states that we have to deal with, and each state deals with things differently. But another reason why we don't normally talk about states is you may have video watchers that are outside in other states, and we just don't want to have a situation where we accidentally step on something that tends to be correct in that state, but isn't in any other state. Here's the thing though, most states are going to force you to file the same way that you're going to be filing your federal return. So if you do married filing separate at the federal level, you're going to be forced to do it at the state level, regardless of whether you want to or not. Now there's of course a few exceptions to that rule. A good example was the old DOMA thing that I was talking about earlier in this video. You do a single return at the federal level because of DOMA, and then at the state level, because the state said we're going to allow you to be married, they would actually allow you to do a married filing joint return in that case. But it was very, very few circumstances where they would actually do that, and I'm talking more like DC, Maryland, and Virginia. I remember, like I said, in the District of Columbia, we saw that several times with many of our clients where they did have that difference, but it was specifically outlined in the law that said, well, you can do this. Other times than that, can't do it. So if you file separate at the federal level, you're going to file separate at the state level. Sometimes states will say if you file jointly at the federal level, we'll allow you to file separately at the state level if it ends up working out being in your benefit. And there's some states, very good example, Commonwealth of Virginia and also the District of Columbia, that you can do a married filing separate on a joint return, which basically says that you do one return, but it's going to be married filing separate rates. So it's not that convoluted if you are going to be benefited by having a married filing separate return at the state level when you have a married filing joint at the federal level. So again, there's not really much more to say about that. Married filing separate generally doesn't work out for people. There's certain times where you're going to have to do it. And actually, before I wrap up, I do want to talk about one time where we're going to have to do it. If you're a client that's coming to my office and you're an international taxpayer, for example, you're not from the United States, this goes way out the door. Okay, so there are times where we have to do married filing separate. For example, if you do what's called a dual status return, or if you do a non-resident tax return, we have to do married filing separate on those returns because they will not let you do married filing joint unless under specific circumstances. I believe the Republic of South Korea citizens can do married filing separate or married filing joint on a non-resident return, and usually on a dual status return, I mean, it's just never going to be done. And that gets really nasty, and that's kind of the reason why we tend to want to elect people to be married filing joint, and there's various rules on that, and that's way for another video. I don't want to get into that because most Americans have no need for it and will never need it, so, or have no desire to learn it. So again, my name is Kevin Matthews. I am the tax professor. Remember, class is still in session because the learning never stops. If you have any questions for me, you can leave a comment in the comment box below. If you want to reach out to me personally, my website is www.betasolutionscpa.com. That's www.betasolutionscpa.com, and you can reach out to me and I'll be happy to get back to you as soon as I can through our info box. Again, thank you very much for watching the video.